Hi, everybody. Natasha Koch here with the Van City Scoop live Thursday. I know what day of the week it is, finally. Sometimes I'm not really sure what day it is, but I definitely know when my calendar tells me that it's my live, I've got to get ready. So here we are today talking about, hey, George, how are you? We're talking about some homeowner breaks for taxes. So it's kind of tax time. Well, it's actually past tax time. I've already done my income tax return, but hey, Jackie, thanks for joining. And hey, Gail. And so I have my accountant do my taxes. I'm by no means an accountant or an expert in this area, but I thought I would share a few things with you because I love to save money when there's money to be saved. And especially when, things are a little bit tough. And when, a homeowner buys a property, there's a lot of expenses. So if I can find a way to save you some money, I would love to. So let's talk about the 6 things that I have found that you could save additional to the regular payments that you have to make, like your mortgage payment now that you've bought a house, your utility payments, your property insurance, your maintenance, all of those lovely costs. So the first one is the first-time home buyer tax credit. So the first-time home buyer tax credit is and I actually didn't even know this existed, to be honest with you, but it's a $750, a maximum of $750, and it was actually designed to recoup some of the closing costs and transfer costs and legal costs. I mean, when you add those up, they're definitely more than $750, but at least there is an opportunity for you to claim some of that. Now, I did actually take some notes that I wanted to share with you. So for the first-time home buyer tax credit, there's some stipulations that you have to meet. Well, actually on all of these credits, there's things personally you have to meet as well as the property itself. So you want to check out the website for any tax rebates or tax credits. So once you've purchased your home, it has to be claimed within 1 year, this tax credit. The property must also be eligible, so check out what that is. Located in Canada, existing or new house, semi-detached, townhouse, condominium, mobile home, or apartment. So it does have a wide variety. It actually even may qualify for cooperative housing. So in Vancouver, I know we do have some co-ops, so that may qualify as well. You have to occupy the property within the first year, and it has to be registered in your name. So and there are some stipulations where you wouldn't qualify if you've owned a house in the last 4 years. So it's mostly for people that are first-time buyers, but it's a little bit of a tax savings. Number 2, the home accessibility tax credit. This is a pretty cool one too, actually. Once I did some investigating, I realized that you can get up to $10,000 if you're a senior. So this is more if you need to make your home safe or accessible. Let's say you're in a wheelchair, and so you need extra devices for mobility issues. You can get the home accessibility tax credit of up to $10,000. And not only that, you might even be able to qualify if you're looking after somebody, like a parent that needs to come and live with you. You can also potentially be eligible for that tax credit too, which is pretty cool because sometimes, your parents are getting older and they need to get up the stairs. And some people think they need to sell their house and buy something on one level, but maybe you actually don't. You do have to be 65 or older, and you do have to have a disability tax certificate. So I know that those are a couple of the qualifications for that. So that's kind of a cool thing. Then we've got number 3, we've got medical expense tax credit. It's kind of similar. And you can claim a certain amount. So it's basically, again, regarding mobility issues. So it's kind of nice that the government seems to look after the elderly. I like that. And this is credit up to 25% on medical expenses. So, this may qualify for different expenses, maybe not just mobility issues. And so it does, there is some stipulations as far as your annual income. So you should check out again the eligibility for medical expenses. Okay, so number four, number four, you probably already know, but maybe you don't know how it works. So GST and HST. So some provinces still have HST. We do not here in BC, but when you're buying new construction, you have to pay GST or HST on your purchase price. So, and it's just like any other product that you buy. The only difference is that you may qualify to get most of that money back. So when it comes time to file your income tax, there's a few stipulations, of course, for that too. The principal residence has to be less than 450,000. And there's an added benefit for residents in Ontario regarding the HST or the portion of the HST. I'm not exactly sure how that works, but again, go online if you're in Ontario and check out the rebate for HST and see how you would apply. So number five, rental income. So let's say that you're buying a property and you're not going to be living in it, then you would obviously have rental income from your property. And so you can report the rental income. Some people don't want to report rental income because, well, we have to pay tax on it as income, but there's lots of write-offs. So, you know, chances are pretty good that you'll be able to write off quite a bit against your rental income, more than you think. So you can write off things like property insurance, marketing fees, you know, if you have to place an ad to find a renter, interest paid, you know, money borrowed, lots of things. So there is a specific tax form that you have to submit. So you have to use a T776. Ask your accountant. Have no idea what it looks like, but it is a special form when you're getting any kind of tax rebates on rental income. So, and then the last one, I think that's six, number six, home office. I have a home office, and you know what? More and more people have home offices. A lot of people are working from home nowadays, or at least doing a portion of their work from home. So why wouldn't you take advantage of claiming that on your income tax? So if you are working from home, there's certain expenses that you can claim. So you can claim your utilities, your phone bill, your Wi-Fi, your property insurance, even cleaning materials, which I didn't know, and I like to clean. I mean, I guess you probably can't claim that much on your cleaning expenses because how big is your office? Office furniture, equipment, printers, whatever you use, you know, to do that. So anyway, considering all the potential tax breaks that you get as a homeowner, it's kind of worth taking the time to talk to your accountant just to see. There might even be more than these. These are just six that I've found. And so you might as well save money where you can. You're already spending quite a bit when you buy a house. Thanks. Hi, Scott. Nice to see you. And Yuri, thanks for joining. So there's some money savings on your taxes. If you didn't claim it this year, some of them you still have within this year to claim, or you can definitely claim them on your next tax return. Anyway, thanks for joining on this Thursday's Van City Scoop. We'll see you every Tuesday and Thursday at 6 o'clock. Thanks for joining, everybody. Talk to you soon. Bye.